Hello friends, welcome to my channel. Today I'm going to teach you a trading strategy that allows you to easily achieve a 1-2 or 1-3 risk to reward ratio. So without further ado, let's get into the tutorial. Well friends, in the first step, what you do is to determine the ceiling and floor of the previous day's candle. Now these candles you see are daily candles. Let's determine the top and bottom of the previous day's candle. This will help you understand important price ranges and identify better entry and exit points. According to these ranges, you can adjust your trading strategy more accurately. Now we enter the 5-minute time frame. Well, this area that you see is from the previous day, which I'm going to show you now is the top and bottom of the previous day. Based on these levels, key support and resistance points can be identified in order to have a more accurate entry and exit strategy. Also, the analysis of trading volume in this area helps to confirm the validity of these levels. When we determine the price levels, we wait for the price to reach the price ceiling or floor, and when the price reaches the previous day's ceiling, we enter into the transaction. But one point is that we should not have entered into the transaction here. You may ask why. Because if you pay attention to the pin bar candle that happened here, you will see that there is a 100 pip candle, and if you entered into the transaction here, the risk would ruin your reward. Therefore, we enter the time frame of 1 minute. We find the place where we wanted to make a trade, and we enter the sell trade and set the target 2 times what we risk, but the trade will lose. This trade will lose. But we should not forget the whole strategy with the failure. We will wait for the price to return to where we want, and when it returns, we will enter into the sale transaction with candle's approval. We'll put the risk to the reward 1-2, and yes, as you can see, you will profit from this transaction. Well, this time the price broke the price ceiling and went up and pulled back. Well, we are here waiting for the confirmation of the candle to enter the purchase transaction, and when I see this candle and then the confirmation candle, we will enter the purchase transaction with a risk to reward ratio of 1-2, and as you can see, it will be a beautiful profit, and we will not trade again today. Well, now I will show you another example. Very well. Now we'll redetermine the ceiling and floor of the previous day's candle and enter the 5-minute time frame. Now we see the ceiling and floor here. As you can see, the price has beautifully reached the candle's floor of the previous day. Now here, when I see the pin bar candle and see the confirmation candle, we enter into a purchase transaction with a risk to reward ratio of 1-2, and we make a profit very nicely and easily. This strategy shows how to optimize arrival timing by accurately identifying key points. Also, observing the appropriate risk to reward ratio increases capital security during market fluctuations. Finally, combining different time frames helps the trader to have a more comprehensive view of the price trend. Now, let me show you another example. Like the previous rejection, we redetermine the previous day's ceiling and floor, and we enter the 5-minute time frame. Friends, as you can see, the previous day's ceiling and floor are completely clear, so the new day, which started from here, I will determine now, and as you can see, the price will go down to the previous day's candle floor, and you will enter into a purchase transaction with a risk to reward of 1-2. But as you can see, this transaction gives much more profit and risk too. He also gave 1-4 reward, but we are not greedy. I will take the same 1-2 and leave the deal. Another important thing to consider is careful capital management at the time of entry to avoid sudden fluctuations. You should also note that the market does not always move in a linear fashion. and sometimes minor corrections occur before the main trend continues.